Leading the S&P 500 following a beat on the top and bottom lines, the company is also raising prices on farm equipment, and it forecasts sales gains in the year ahead. Now, industrials are outperforming over the last month. That sector up nearly 15%. You've got names like Johnson Controls, United Rentals, so-and-so up about 30% in that period. Joe Terranova, maybe we'll start with you on this conversation since you actually own shares of Deere. Was this a good report in your mind? Do you want to keep holding it? Do you want to add to it? Do you want to trim positions? Anything change with regard to your investment thesis on Deere?
You know, you're happy with the report. Understand a lot of high expectations were built into the stock price ahead of earnings, but you want to stay with it because you're in the midst of what really looks to be more of a secular bullish environment for agriculture overall. And in that environment, the replacement cycle for an aging farm equipment population is going to be accelerated significantly. Also, the implementation of autonomous tractors that will once again be significantly populated throughout the agriculture industry. It's a reason to stay with this company. So the ag space right now moving into 2023, whether it's John Deere, Archer Daniels Midland, Mosaic, Corteva, a name that we've mentioned on air recently. I know Stephanie Link owns it. These are all agriculture names that I think the investors want to stay committed towards because I don't know when you're going to see a little bit of a receding in a lot of these strong tailwinds that are emanating for agriculture overall.
You know, part of that report also cited the strong demand for that construction and farm equipment as well. Also, this idea that infrastructure investment and spending is going to pick up, which helps their construction machinery equipment there. Shannon, on the industrial side, you're an owner of many of these names as well. I wonder, is it Cat Deere that is the best idea for you in industrials, or are you looking elsewhere, maybe aerospace?
Yeah, I think overall, I think there is really, to Joe's comment, a strong secular tailwind for agriculture, but I also think that there is just a strong secular tailwind for capital expenditure, real fixed asset investment. I think we're moving into, you know, the next phase, whether it's the reshoring of manufacturing or whether it's creating just overall greater productivity and efficiency in a number of different sectors or subsectors of the industrial sector. And so I think when I look at sort of our basket, the theme that we're looking at is that productivity and efficiency improvement. Names like Rockwell Automation, for instance, names like Honeywell. And then thinking about it in terms of how do we move those goods? So with the Union Pacific, I think there's a lot of different ways that you could play the industrial sector as you go into 2023. But I think that there is, you know, likely going to be this pickup in CapEx. And I think that it's at, you know, both the private and public level. And it's not just here in the United States. We're going to see this as a global trend. So although we have some concerns, obviously, about a moderating global economy and the potential for, you know, what is, in our view, likely a shallow recession, 23-24, I think this does have longer term trends. And I think that you can play it either with a basket. Great example of a part of an ETF that has an agricultural basket is GUNR. But you can also play that in terms of picking some of these industries within the industrial sector and really, you know, expressing that theme in a number of different ways.
So one pick that's up on the screen right now that you mentioned is Honeywell. And Steve Weiss, I know this is a name that you've been involved with in the past. Have you been adding to that position for Honeywell? And if so, why?
No, I mean, I bought it recently within the last month. I like it. I like the fact they're focused on automating manufacturing going forward. And I think they've got a phenomenal CEO. So I'm not adding to it here. I actually had to hold my nose to buy it because it's not cheap, but they're in the right spot. What's surprising to me today is that Bunge and Mosaic, which I own both, are down marginally on the day. You would think that they would benefit from some tailwinds that are also helping Deere. But the biggest surprise is, you know, over the last week or so has been CapEx spending. I would have thought that looking at the very real potential of a recession that you would have seen CEOs pull back and save for a rainy day. Admittedly, corporate balance sheets are really flush with cash and that they haven't been spending a lot through the entire cycle building that cash nest egg. So I would expect, though, that for that to slow down. And there aren't many recessions where industrials do particularly well as you're going into them. So I'm a little cautious on the space. Clearly, the money's gone there, not so much for the fundamentals, which have been mixed, frankly, but because they've gone out of tech. Tech had been such a big portion of the S&P, they had to find a home. So they're going to the next liquid place to go, and that's industrials. So I wouldn't read into that as any prediction that this is going to be a sustainable cycle through a declining economy, because it won't be.
All right. Industrials certainly a key focus given what's happening with the Deere shares today. All right, guys, thank you very much for that.